Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, I wanted to introduce a brand new penny stock to the channel. This is a company I just purchased in my personal portfolio. I'm actively adding to the position. The company name is Trican Well Services. As the name implies, they're involved in the Canadian oil and gas sector. I'm super excited about this one for a number of reasons we're going to talk about in today's presentation. But before we do, please take a second, smash the like button, you guys. It's a huge help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to do so. And let me know in the comment section below if you've heard of this company before, if you're currently holding shares, and how you think they stack up to some of the other players in this space. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video we're going to be covering an oil and gas related play here in Canada, none other than Trican Well Services, trades under the ticker symbol TCW on the Toronto Stock Exchange. As you can see, they closed out Wednesday's session up 12 cents per share, just under 3%, at $4.27 Canadian, and this is a company that's been performing extremely well over the last couple of months. Obviously, as we've seen the price of oil and gas, or the underlying commodity, improve tremendously. So based on this most recent close, you're looking at a market cap just north of $1 billion Canadian, and if you look at a 6-month chart, Trican was actually trading in the $2.50 range back towards the end of December. And if we zoom out to a 1-year chart, you can see Trican was in the $2 range back towards the middle of April of last year. So an extremely strong performance over the last 12 months, despite the volatility we've seen in the equities market. Now we've got a lot to talk about in today's presentation. We're going to take a look at the corporate website, talk about some of the recent developments at Trican, and jump into the investor presentation to do a deep dive on the company's business model. Now before we get into the main event and do our deep dive on Trican Well Services, I did want to spend a minute on iTrustCapital. This is a great platform if you're bullish on crypto overall, especially for those of you who live in the United States. So essentially what iTrust allows you to do is own and trade cryptocurrencies through your IRA or Roth IRA account. Now the benefit of that is you're going to be able to harness the tax advantages of these accounts while holding crypto or traditional precious metals like gold and silver. So there's a link in the video description below. It's a $100 sign up bonus if you use that referral link. And as we've talked about in previous videos, this is one of the only companies offering this service. They've got a 5-star rating on Google and over 100,000 customer accounts. So very reputable business model. And if again, you're bullish on the price of cryptocurrency long term, you want to make sure you protect those gains. And this is one of the best platforms enabling you to do so. Now with that being said, we're now going to shift gears and start to focus on Trican Well Services. So as you can see here, this is an equipment service company providing various specialized products, equipment, services, and technology used in the drilling, completion, stimulation, and reworking of oil and gas wells here in Canada. So the company offers a number of different solutions that you can see here: coiled tubing, cementing, acidizing and production enhancement, well intervention tools, reservoir solutions, fracturing, and remote monitoring solutions. So a whole host of different services that are being offered here, and I'm super excited about this company for a number of reasons we're going to talk about in today's presentation, including some of the new technology they're deploying, the size or the scale of their organization compared to some of the competitors, and on the macro side of things, the oil and gas environment overall here in Canada. And as we're all aware, oil and gas prices are hitting some of the highest levels ever recorded, and obviously that's a huge benefit for companies like Trican Well Services that are directly involved in this industry. And as we're going to talk about later in the presentation, the number of companies in Canada that are actually offering these type of solutions and the number of crews they have available to deploy really are starting to be stretched quite thin. And obviously when demand is super high and supply is low, these crews are going to actually be able to increase their rig rates, which is going to bode extremely well for not only top line revenue, but also profitability for companies like Trican. So if we now jump into the investor presentation and we start talking about who Trican really is and their business model, you can see they're a leading Canadian energy services company servicing wells in Western Canada for over 25 years. So they're one of the most established and largest players here in Western Canada. They're currently the largest pressure pumping company, and their goal is to generate industry-leading returns in an environmentally and socially responsible manner. So we're going to talk about their ESG mantra in a second here, but again, a company that's really trying to live into that ESG investment profile. Trican's service lines, or the services that they offer, are an integral part to about 60 to 70% of a typical well's capital cost. So they're really involved in a lot of aspects here of bringing these wells online. And as you can imagine, with oil prices increasing, the number of wells being drilled is also going to increase. And as a result, the services offered by Trican, again, are going to be in high demand. So in terms of the drilling cycle, they offer cementing services. The completion cycle, they offer fracturing and coiled tubing. Under the production cycle, they offer coiled tubing, acidizing, chemical services, and remedial cementing. And then under the full service technical expertise, they've got things like engineering support, reservoir expertise, and laboratory services. Again, looking to service the customer holistically here, wherever they are in this drilling journey. So with that being said, some of the strategic priorities laid out in the investor presentation at Trican Well Services. Number one is really strengthening their existing business, so maintaining that market-leading position in both fracturing and cementing services, expand their coiled tubing market share, and activate parked equipment to really get all of their fleet out in the field and fully deployed. Now here you can see their ESG focus, so environmental, social governance focus, adapt their business approach, integrating ESG into their daily operations, differentiate their business with new technologies, which we're going to look at in a second here, to reduce their environmental impact, and build strong community relationships in areas in which they operate. The third pillar is shareholder return. We've got a great slide really talking to this in a couple of seconds here. So return capital to shareholders through share buyback programs, and sell excess and permanently stranded capital equipment, which in turn returns funds to the balance sheet. And this is something Trican Well Services has done a great job of over the last couple of years. Now the final point here is really about cost control and efficiency gains, so reducing costs for the business and in turn their clients through efficiency improvements and scale. So really a four-pronged approach to elevate this business to the next level. So now that we understand the business model, the services that they offer, and some of the key priorities behind Trican Well Services, I wanted to look at the area in which they actually operate. So you can see predominantly Western Canada here, BC, Alberta, Saskatchewan, and some operations in Manitoba. They're the largest pressure pumper in Canada, which we already mentioned. They've got the largest fracturing fleet in Canada as well. They're a market leader in their cementing services, and they've also got those complementary or additional supporting service lines, including coiled tubing, which they're looking to grow, nitrogen, and acid services. And in terms of some of the key oil and gas deposits here in Western Canada, they actually have a leading market share in the Montney and Deep Basin resource plays, which are really located on the border of BC and Alberta, as you can see in the map here. Now, from a financial standpoint, this is where I really get excited about this company. And for full transparency, I actually just purchased some shares in the range of about $4.29 Canadian, and I'm super excited about this company over the next couple of quarters. Now, a few points to specifically call out on this slide. They've got strong free cash flow generation capabilities and ability to fund capital programs as well as share buybacks, which we're going to talk about. They've got low financial leverage, so unlike some of the other players in this space, they're not highly leveraged. And they've got a clean balance sheet, allowing them to take advantage of potential acquisition targets throughout the cycle or service cycle. They're monetizing or selling back their stranded capital, and as you can see here, since 2017, they've actually sold about $83 million of excess property and equipment at values approximately net to book value, meaning they didn't lose money on these assets. And as of December 31st, 2021, they've got positive non-cash working capital in the neighborhood of about $74 million. So an extremely strong balance sheet, and again, gives this company flexibility as opportunities arise. And you can see over the last couple of years, they've been aggressively paying down their debt. So that's the red line here, virtually eliminating their debt altogether by Q4 of last year, which is super impressive to see. And again, something I love as an investor in this company. Now, I briefly mentioned this slide in the intro, and it really talks about the ways in which Trican is returning capital to their shareholders. So they're primarily doing this in two ways. Number one is through dividends, and the second is a non-course issuer bid, or NCIB. As you can see here, since 2006, Trican has returned over $440 million to shareholders through their dividend and share buyback program. They've invested over $226 million in repurchasing more than 30% of the company's shares since October of 2017. So those are the share buybacks in action. And Trican has now purchased $5.1 million worth of their own shares from January 1st of this year to February 28th. So in just 2 months alone, they've actually put $5 million plus into share buybacks. So these are both extremely bullish indicators for me as an investor in Trican Wealth Services. Not only do they have excess cash to actually purchase these shares, but they feel their company is trading so significantly under fair market value, which we're going to look at towards the end of the video, that they actually are going out on the public market and buying these shares back, which in turn actually bolsters or improves the EPS or earnings per share for the remaining shares available to the public market. Now the next slide here really talks about some of the new technology that Trican is introducing into the Canadian oil and gas landscape. So their Tier 4 DGB technology, this is really going to improve the environmental impact and efficiency of their fleet. They're the first company in Canada to deploy Tier 4 DGB low emissions fracturing fleet. This is going to displace up to 85% of the diesel fuel used with cleaner burning natural gas, which is going to in turn reduce costs and on-site emissions, and it's going to reduce tanker truck traffic on local roads because they don't require as much diesel fuel. Now in Q3 of last year, Trican announced a second Tier 4 low emission fleet to bring the total Tier 4 capacity to 84,000 HHP, which stands for hydraulic horsepower. The second fleet is anticipated to be field ready in the second half of this year. Now, in addition to this exciting development, they've also got technology on the roadmap to reduce tractors on location, reduce on-site idling, improve equipment monitoring technology, and in turn reduce repairs and extend the life of their equipment. So all of these steps are really in service of that ESG focus or pillar that we talked about a couple of slides ago. And that's a perfect segue to this slide here, which really talks about their fleet capacity. So again, you can see HHP or hydraulic horsepower. Trican is at the top of the pyramid here in terms of Canadian capacity as of Q1 of this year. They've got a total HHP capacity of 573,000. Actively crewed right now is in the neighborhood of about 362,000, which equates to 7 fleets. And you can see the closest competitor actually has 4 or 5 fleets. So again, making Trican one of the biggest operators, if not the biggest, in Western Canada. Now, the other thing to note here, some of the competitors in this space, you can see the asterisks on competitor F and G, have extremely small capacity and crews, and a lot of times these just aren't suitable for the larger scale jobs or higher intensity plays. So again, scale is crucial in this business, you guys, and that's exactly what you're getting with Trican Wealth Services. Now, the other thing I wanted to call out here, you can see the Canadian competitive landscape is much more consolidated than the US market. So the market in the US has tons of different competitors, whereas here in Canada, there's just a handful. And as a result, the demand is now exceeding the supply for active crew fleets in 2022. And that's exactly what I alluded to at the start of the video here. The crews that are deployed by these companies can no longer meet demand. And as more wells and plays continue to come online, that's going to result in favorable pricing power for some of these companies like Trican. And not only that, it's very difficult right now to find the specialized workforce that is required to man these crews. So even if the competitors wanted to scale up their operations, it's not necessarily an easy thing to do to actually go out, recruit, find, and hire these type of individuals. And this slide here is a perfect illustration of that. So if you take all of the fleets in Canada, based on the competitors we just looked at, there's a total of 29 active fleets. And the estimate or the forecast is these fleets are going to be fully utilized with about 4,500 wells. Now, as you can see in 2022, expected, they're looking at about 5,500 wells compared to some of the all-time highs we saw back in 2013 and 2014 in the neighborhood of about 11,000 wells. Now, not only that, they're continuing to see an increase in well service intensity as pumping hours per day and proponent volumes per well continue to increase. And this increase in service intensity is going to require more equipment and bigger crews per well. So not only are we seeing well numbers increase, but the size and scale of these operations or wells is also increasing, meaning they require more equipment. Again, a very favorable bullish factor for companies like Trican. And as a result, if we now jump over to Simply Wall Street, I'll leave a link in the video description below. This is an awesome platform to do your research on here, you guys. If you haven't used Simply Wall Street before, go in, take a look. It's a 14-day free trial. If we pull up Trican Well Services, you can see they're currently trading 76% below Simply Wall Street's fair market estimate or fair market value of this company. Their earnings are expected to grow by 50% this year. And if we actually scroll down to the valuation section here, you can see the fair market value on Trican Well Services is actually estimated in the neighborhood of about $17.42 compared to their current share price just north of $4 Canadian. So a tremendous opportunity here if you're looking for exposure to the oil and gas sector and you don't necessarily want to own one of the producers. So in summary here, you guys, there's a lot to really be excited about in terms of Trican Well Services. Again, this is a company that I personally own in my portfolio. 3 of the key things I wanted to leave you with here before I let you go. Number 1, the return on invested capital or ROIC and capital discipline. So this is one of the top ways that Trican has really differentiated themselves from some of the other players in this sector. They have operating efficiencies that are going to drive additional free cash flow and profitability, and they're adapting their business, integrating that ESG focus to really improve overall stakeholder value. Now, the strength of the organization is the middle point here. They're the largest Canadian pressure pumping company with a broad service offering, again, representing or spanning about 60 to 70% of a new well's capital costs. They've got strong customer service, resulting in a loyal customer base due to that long-standing history and experience in the sector. They have low debt, allowing Trican to withstand industry volatility and take advantage of acquisition opportunities. And their technology, which they're continuing to improve, is focused on providing new solutions and improving efficiency among their existing fleet. And all that being said, in terms of the actual opportunity here, they've got capacity on the equipment front for incremental returns during this market recovery we're witnessing. They've got financial capacity for opportunistic equipment and technical differentiation. And they're supporting the Canadian natural gas or LNG play, which is critical in reducing global emissions. So for those reasons, you guys, I definitely think this one is worth a look. I'd be super curious to hear your thoughts on Trican Well Services in the comment section below. If you're currently holding shares of this company and how you think they stack up to some of the other competitors in this space. If you're still watching the video at this point in time, hopefully you found some value, so make sure you hit the like button. If you're not already subscribed, McNallie Money, feel free to do so. That's all for now. Thanks so much for watching and have a great rest of your day.